One of the most recent deals announced was eToro. That's ticker FTCV. The deal valued eToro at $10 billion, which was, a significant increase from their last valuation from a funding round. So can you walk us through a little bit why the $10 billion valuation, for a company like eToro?
Yeah, I mean, look, eToro is cheap on every metric that you look at it. It is a powerful generator of earnings. It's a powerful generator of revenue. It's a powerful generator of growth. It provides fantastic services and a combined social and investing experience for people that's unique. And, so if we look at it in terms of a multiple of revenue, it's cheap to something that's as old school as Interactive Brokers. If we look at it in terms of pre-marketing EBITDA, it's also extremely cheap when you look at it as in terms of traditional financial services. The company continues to do well and continues to grow. It's grown faster than people have expected. We've known the company for a long time. We're very bullish about a number of the changes that have happened that have really increased the lifetime value of the customer and a lifetime customer and the interaction that people have with the platform. And what I would say is that if you're, in a jurisdiction where you can use eToro's full functionality, you should go and try it out. And as more of that functionality comes online in the United States, I think U.S. consumers are going to find that it's a very compelling format. One of the things that it does particularly well is that it really opens up in its copy portfolio and its social investing way. It opens up the ability for people to share ideas with each other in a more effective format, somewhat moderated within a brokerage and investing context. So if you take a positive viewpoint towards the collective intelligence of all the investing public, then it's probably, something that's going to have a major beneficial and salubrious influence on the investing public.
Awesome. So you hit a little bit on the U.S. part there. That's the part that stuck out to me in the presentation is, eToro looks like they're just beginning with the U.S. expansion, in terms of stock trading and some other options. Was that a big part of getting this deal done and that valuation, then the potential growth of the U.S.? And what's the timeline look like for that going forward?
I think, look, eToro shouldn't have more than 15% of its revenue in the United States for a number of years going forward. All the material is really, contained in the filings that we made. And if we look at it, the key element going forward is really the revenues globally, which we think are very strong. The revenues are primarily European, Southeast Asian, so Asia ex China and Middle Eastern, as well as elsewhere. And we're just excited about the whole entire worldwide growth. It's a strong brand in its jurisdictions. It has strong participation across, the UK, across Germany, across France, and elsewhere. And we expect, substantial inroads in the United States. And that's really a plus for investors, is that upside of growing in the United States tremendously well.